Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today, well, it can't be anything else, or one of the points has to be around India's weightage in the EMs, and the second point has to be around elections, because both of those things are front and center. So we obviously talk about that. We also talk about a very specific subset within the markets, which is the recency of the announcement prompts us to do that, which is the new EV policy and the impact that it has on a very large sector, which is autos. Joining us to talk about all of these and more is Aditya Suresh, Head of Research and Strategy India at Macquarie Capital. Aditya, it's been a while. Thanks so much for taking the time out and being with us. Aditya, let's start off with the global backdrop within which India operates as well, because FI flows haven't quite been that great. People anticipated with the election verdict post the state election decision in December, if the June election verdict seemed to be a shoe-in, that flows will start from Jan. That hasn't quite happened. While India's weightage in EMs has gone up, while the bond indices inclusion is all coming in. So explain to us from your perspective, how are your global clients thinking about investing into India?
Yeah, no, Niraj, so thank you again. I think the backdrop is still fairly constructive when you kind of think about India's kind of growth outlook, thematics which are at play. India is still one of the larger emerging markets which can actually grow labor, capital, factor productivity, and this is something which you can kind of get behind as a theme over, let's say, a decade. And there's a bunch of work which we've done around this with our big book of trends. So I think the thematic backdrop and the growth kind of backdrop is clearly something which attracts investors. I mean, is this priced in? Is I guess the second part of that piece, and that's kind of where we kind of have more challenges answering that question. In particular, in that say 6 month, 12-month kind of window in the short term. So that's one side of the equation, Niraj. But then, like even when I think about as you're putting up on the chart here, which is India within emerging markets, our share continues to kind of increase. Today we're about 18% of emerging markets, while side of China's kind of come down from 40% down to 25. If you kind of push and ask, where do you think India's weightage could expand to over the next, say, couple of years? We're more in the camp that it further expands, even with kind of the rich kind of valuation backdrop. So I think that it's this thematic undertone, though, which is really still a fairly key support factor here for India as a market. You're not seeing that in the flows in Jan and Feb, but you did see that through last year, where we saw about $20 billion worth of inflow, even with these high valuations.
Okay. Do we see the advent of flows, Aditya, just to get this clarity, if they are to come in, because under this constructive backdrop, post the formal verdict of the election, or does the election have not much to do with it this time?
I think that there is an element of that when you're kind of getting into these investment committee kind of meetings type. There's probably like, let's get this across. Let's get this kind of hurdle kind of formally crossed out before kind of allocating incremental dollars to India. Maybe that's at play here as well. That would be a consideration, Niraj.
Okay, thanks. I mean, because otherwise all of us thought that, hey, now that it's a done deal, what is stopping? But maybe what the point that you mentioned about there need to be a cross done out there formally is an interesting point. The other aspect, Aditya, is the combined impact of foreign investor interest into India as a result of, one, the uptick that has happened in India's weightage in the EM pack or the overall pack, Asia pack, if you will, and the fact that there is both the JP Morgan bond index inclusion and now the Bloomberg bond index inclusion, albeit the larger one from Bloomberg is still to happen, but be that as it may, that has also happened. I'm just trying to understand, what are client conversations like when it comes to a couple of these technical factors when you talk to your clients?
I think it's just an ongoing recognition of the theme that India's weightage in all these indices is set to further rise, right? And therefore, how do we get position? Where do we position? Is kind of more the conversation rather than anything else. So I think it's more about what do we do with this kind of increasing allocation, and kind of then with kind of valuations and kind of what's baked in across earnings estimates, etc. That becomes where the conversations tend to flow. But I think all these are clearly very big positive support factors here. it also kind of clearly impacts from a rupee perspective, right? And therefore, in terms of dollar returns, all these kind of index inclusions and there's natural dollars coming in, it helps overall dollar returns as well.
Okay, Aditya, what is to your mind now, therefore, what is the roadway from here till the end of December for Indian markets? I know a clutch of global elections, there is this whole set of policy decisions from the central banks which will have an impact too. But since you are the strategy head and you have to bake all of this in and give a year-end target, what is it that your note would highlight when you're sending it out, if you had to send out the note today to your global clients?
We did do that a couple of weeks back, but the main message was that in terms of the top down, we actually struggle a lot to defend empirically and kind of fundamentally why India is trading where it's trading, right? So when you think about fundamental, if you kind of break down India's kind of multiple as just three parts in simplistic terms, EPS growth, ROE, cost of capital. Whilst it is true that say maybe 12 months back, 24 months back, we had a very large EPS growth premium compared to emerging markets. What you'll notice in the broader backdrop is that after fairly sharp cuts in terms of emerging market expectations, whether it be Korea, China, all these markets, when you put EPS growth today expectations, emerging markets about 15%, India about 15%, so that relative growth premium in itself is not really a support factor. What is a support factor? Simply that India's continues to see estimates being revised upward, and there's more kind of visibility and quality of those earnings, but growth premium in itself is merely in line. So that actually is going to work against the multiple if it is purely on that factor. Similarly, return on equity as a factor is barely in line, right? So our 300 basis points kind of premium to emerging markets is not really explaining why our premium multiple is now, say, close to about 3 standard deviations above normal. So I think the crux of the story remains about liquidity dynamics, right? And we started off with foreign liquidity, and that so far this year has been a mild negative factor. But then domestic liquidity continues to be surprisingly positive, right? And so to that extent, for us, where we are is really a function of the liquidity conditions here in the marketplace. And where we end up in say 12 months, 18 months, for me, more, Niraj, is going to be a function of what's happening to domestic liquidity. If domestic liquidity can kind of sustain at these kind of $2.2 to $2.3 billion of kind of natural inflow, which we're seeing, clearly that's supportive here for markets. But whether it be the SEBI actions or RBI, et cetera, if there is really, if that leads to a tightening of liquidity conditions, that then would point to downside to markets. Because as I say, purely on fundamentals, EPS growth, return on equity, et cetera, we are stretched as a market. And that stretched kind of comment is coming on expectations which are already elevated across all the different sectors which you're looking at. Earnings growth in itself is the relative growth is merely in line. It's not a support factor for the multiple.
Okay, and viewers, in some sense, if you look at the Nifty and if you look at the 3 month, 6 month, 9 month, or 12-month return profile of the index, it kind of exemplifies that. India had a great move, let's say, for example, in calendar year 23, but by no stretch of imagination was India the best performing index, if you will. There were other indices which far outstripped the gains, and which is, I think, kind of exemplifies the point that Aditya is making, that India is a good market. The fundamentals are great, but the valuations at the margin are stretched, and that is an issue. So if top down, Aditya, is an issue, how to play the bottom up story? What is it that is standing out as the key, how do I say, what are the firsts amongst the equals?
Yeah, no, again, so this is also a hard question, because 12 months back, 24 months back, when we had these discussions, Niraj, we might have made a comment along the lines of if earnings is kind of where we're going to allocate, so on and so forth, that financials is a sector where we see earnings upgrade risk, right? Industrial, similar comment, where there's upside to earnings estimates is what we had kind of argued for. Similarly with autos and as well. But now when you kind of look at where earnings estimates are at, I don't have that comment for you. So when you kind of look at financials as a sector and kind of what's baked into consensus expectations. There's a fairly sharp kind of uplift in that kind of in earnings expectations for fiscal 25, fiscal 26. At the margin, when you kind of speak to our financials team, they would speak about whether it be kind of growth normalization, credit cost being as good as it gets, margin compression. So even with financials, we're seeing kind of, whilst decent numbers, but we're still seeing cuts there. Industrials, again, a lot of the kind of the large order backlogs, it's already in estimates. So the broader point about that was that whilst 12, 18 months back, it was easier to give you a comment about earnings upside in certain sectors, and that being a proxy for where to allocate. When I kind of zoom out and look at what's already baked into estimates, Niraj, across all the different sectors, I'm not seeing clearly which areas you're going to see upside to numbers. So then the layer below this is then what we do, therefore, is we've got to kind of allocate 100 rupees across India. It then kind of comes down to the bottom up and very selective ideas. So I don't have that generic sector level comment to give you here today. It was easier to do this maybe, as I say, 2 years back. But as we sit here today, I think it's very, very selective, focused, looking at kind of incremental earnings, but we have confidence there. Those are some of the considerations.
Aditya, do you guys track auto closely, and any thoughts here on how to best play the auto space going ahead? Because there's a clux of sub-segments out there which people can pick and choose.
Yeah, no, just to kind of add to the previous comment as well on this kind of EV policy and potential implications, etc. Right. So when you kind of look at autos as a sector and India's share of global trade within automobiles, right? Up until 2015, we were making kind of steady gains, and then over the past, say, 7-8 years, we've basically flatlined, right? So we really lost out in terms of further market share gains. So any of these type of policies, and a lot of it has to be tied back to the fact that we've not made much progress in that EV space. So to the extent that we are going to be looking to kind of address that, then maybe we can be back again on this path of capturing global market share. But it has been a bit of an area of kind of underperformance, if I may, right, in terms of India's capture of global market share because we've not developed that ecosystem. So all these policies and kind of measures which we're kind of pushing to kind of encourage this local ecosystem, I think, we are fairly constructive on this. We're constructive on manufacturing in general as a theme. And within that, like areas within these with existing ecosystems, whether it be pharma, autos, etc., stand out. But I would just call out that these sectors have really not captured incremental share in the past few years.
Auto
anchors, I think, would be really interesting. Yeah.
Okay, so auto ancillaries maybe, but it's an interesting point you made that, on the global scale, Indian autos haven't. Indian pharma, I thought, save for the ones which were facing the brunt of the US pricing pressure, pharma has done reasonably okay on the global stage, you would think, Aditya, or no? And part two of my question, therefore, is that while the generic makers have had a bit of a rally already in calendar year 23, is there more in store there, or do you prefer the CDMO / the other aspects of healthcare, which is either hospital, diagnostics, what have you?
Yeah, just on the first point, on the pharma, in India's share of global pharma trade, we've actually flatlined. In fact, in the most recent year, we're down a bit, despite the expectation, let's say 2-3 years back, that because of what's happening in China, we'll see India pharma continue to kind of gain kind of global market share, in particular in API. Frankly, that's not yet happened. So within our coverage, Niraj, we actually do like some of the larger kind of traditional pharma companies, which are now kind of expanding there's kind of specialty chemicals kind of a portfolio. That's kind of where our preference is. I think CDMOs is an interesting opportunity. It ties back to what I was trying to get at, that when you think about global pharma trade, China is well above India, or China is above India. And if you were to kind of close that gap, it'll be in that CDMO space. And that could be interesting, but it's not yet kind of playing out in estimates. Within the hospitals and diagnostic space, so our analyst is less optimistic. I think thematically, it's a really interesting space to be positioned in. But when we kind of tie the thematic back to numbers and supply-demand pricing, we are less constructive there.
some of the pockets, Aditya, which are coming up, you mentioned CDMO. I mean, these are pockets wherein companies have to invest for a number of years before maybe a really juicy return comes in. And I think we're seeing that in some of the other sectors too, green energy, maybe to an extent defense was such a thing, but now the order flows have started coming in. Do you think public markets are ready for some things like this? And what else, therefore, to your mind, looks attractive enough from a sector which has made investments or continues to make investments and will arguably see stronger returns in the years to come?
For us, thematically, I think that the main point is about just scaling local manufacturing, right? So local manufacturing to GDP is about 15%. The aspiration is for that to be at 25. When you look at kind of investment intentions in areas like electronics and machinery, and kind of when you scale this compared to intentions over the past, say, 10 years, we are materially up, right? So when you think about electronics and machinery, investment intentions in those spaces is almost like tenfold what has been announced in those sectors in the past 10 years. So I think that's kind of where we're seeing a lot of kind of incremental investment intentions that then translates to capex and then kind of potentially into kind of return accretive kind of growth over time. Other areas we're not seeing that as clearly, Niraj. So as I say, even within say areas like autos, etc., it's not at a sector level. We're seeing that trend kind of specifically kind of play out. Renewables is an area where we are seeing investments being made. Intentions are high. There's a strong kind of thematic backdrop. There's a strong government push towards incentivizing that sector as well. But we still have question marks around the unit economics and kind of does this work at scale in a returns accretive manner? So I think that needs to be de-risked. We don't have a strong conviction view that this is going to generate strong returns despite the kind of high capex kind of going into that space. But yeah, those are some of the thoughts here around this. But I think electronics and machinery is really leading in terms of where investment intentions are at.
Okay. Just the last question there, Aditya, therefore. Manufacturing, everything that has got great potential, I mean, say for maybe chemicals and pharma, which are going through a cyclical lull, if you will, or were going through a cyclical lull, almost everything which has got great potential is being priced very heavily, right? I mean, EMS companies, for example, very steep valuations. And so does the strong growth make up for that? Is that predictable in such long cycles? And therefore, are global clients buying that story at these valuations? Sure, they could have bought it 2 years ago. At these valuations for some of those expensive pockets, are people buying those stories?
I think it's really, really selective. And you're correct that these spot multiples look like really punchy. And I think where you are seeing kind of buying coming in incrementally, as you kind of started the call as well. So India is a market you're seeing, at least in the past couple of months, foreigners have been reducing their kind of exposure here, right? At a market level. Within that, when you think about, say, small mid caps, where a lot of these manufacturing companies are, valuations are further kind of elevated, so on and so forth. And some of this is more on the narrative and the thematic rather than being on the tie back to fundamentals and numbers. So where the tie back is not there, I think that's kind of largely kind of a no-go zone, at least today. But I think it's about getting confidence in that 10-year kind of growth story. And therefore, like even if my current multiple is looking at, say, 60, 70 times, if I'm fairly comfortable that this multiple can kind of collapse to whatever, 15 times, 20 times in that medium-term time period, that's still potentially interesting, right? But it's a very selective comment, Niraj. It's not a en masse buy manufacturing because it's a strong theme.
Got it. Aditya, lovely talking to you as always. Thanks for making some very nice points. Really appreciate your time, but look forward to have you more often, frankly.
Thanks, Niraj. Thank you so much for having me. And yeah, it's a tough market. We are trying to navigate this space and would love to kind of engage more.
Thank you. Thank you. That's Aditya, Suresh, and some very interesting points, viewers. Hope you find it as interesting as much as I enjoyed doing it. Thanks for tuning in to yet another episode of The Talking Point.